If you are a finance person, CFO, finance controller, or a AR manager, and you are still spending hours every month formatting aging reports, manually calculating DSO, and writing IFRS provision in a spreadsheet with no real methodology behind them, this video is going to change how you do it that forever. Today, I'm going to walk you through the AR Intelligence Manager, a complete account receivable intelligence system built in Microsoft Excel, which is easily accessible for anybody who works in office. In next few minutes, I will show you exactly what this tool does, how it works, how to set it up, and most importantly, why it is built the way it is. There will be moments where I will switch to interactive slide presentation because some of the concepts like how the priority score is calculated, how IFRS provisioning works, this needs to be explained visually before you see them in the spreadsheet. So when I switch to this slide, stay with me. That context is what makes the Excel walkthrough actually make sense. Let's get into it. Before I show you the tool, let me show you why it exists. This slide represents reality in most finance teams right now. First one, every single month, your team exports an aging report from ERP, opens it in Excel, manually reformats it, starts building their analysis from the scratch. No template, no structure, just a blank spreadsheet and muscle memory. Second, DSO is calculated manually, and even when someone does calculate it, they have no benchmark to compare against. Is 90-day good? Is it bad? It depends entirely on your customer mix and credit terms. Most teams just don't know. Third, the collection priority. Who do you call first? Most of the time, the answer is whoever the collector remembers, or whoever is on the top of the some manually sorted report. There is no rank system, no scoring, no logic. Fourth, IFRS 9 provisions. Every quarter, someone sits down, applies some rates to aging buckets and calls it an ECL. Auditor asks, where did these rates come from? The answer is usually, we have always done this way. This is not a methodology, it is a liability. And the fifth, the cash forecast. The CFO needs to know what cash is coming in next 6 months. That takes half a day of manual formulas assumption every single month. This tool eliminates all of those 5 problems with one refresh. Here is what the tool does at the highest level. 2 inputs, 6 outputs. You give it invoice data, payment history, you press refresh, the tool gives you rank chase list, IFRS 9 compliant ECL provision, a 6 KPI dashboard with dynamic benchmarks, a 6-month cash collection forecast, AI-generated commentary, and a monthly snapshot for trend tracking. All of that runs automatically through Power Query. No manual step, no formulas you have to maintain, no reformatting, just press refresh. Now there are 2 versions of this tool. Let me show you the difference. Same features, different data architecture. Pick the one fits your team. Version 1 standard edition. This is the simplest path to AR intelligence. You paste invoice data into a tab called invoice log. Paste your payment data into a tab called payment log. Press refresh. Everything calculates. Setup takes about 5 minutes. This version is ideal for individuals, small finance teams, or anyone managing up to roughly 2000 invoice rows. Version 2 Power Query Edition. This version is for the team who want a cleaner, more automated workflow. Instead of pasting data in the workbook, your invoice log and payment logs lives as separate Excel workbooks on your computer or on a shared drive. The tool connects to them via Power Query. You update source files, save, press refresh, everything updates. Zero copy paste. This version is for larger teams, shared drive environment, or anyone who wants a permanent, maintainable AR analytics infrastructure. I will start with standard edition because most of the features are identical. When I get to the architecture section, I will switch to version 2 specifically. The setup workflow. Before I open workbook, let me walk you through the workflow. So when you see it in Excel, all makes sense immediately. Step 1, setup. You do this once. Open Start tab, enter your company name, currency, reporting date. This is as of date, the date you want all calculation relative to. You also choose your provision method here. IFRS 9, internal policy, or higher of both. I will explain those in detail shortly. Step 2, load invoice data. For version 1, you paste in Excel invoice log tab. For version 2, you update your external invoice log workbook. Step 3, load payment data. Same idea, payment log in tab 1. Payment log in version 1. Payment log tab, that is Excel sheet in version 1. External file in version 2, which is a Power Query connection. Step number 4. Press refresh. This is the button on the AR Intelligence dashboard. Click it. Power Query runs 9 queries in a correct sequence. Takes between 10 to 30 seconds depending upon your data size. Step number 5. Enter 2 manual inputs. Total credit sales for the 90-day rolling window and opening AR as of the start of the window. These 2 numbers are required for CEI calculation. I will explain what is CEI and why those inputs are needed in a moment. Everything else is fully automated. This is the complete monthly workflow after initial setup. 5 steps under 5 minutes. Alright, let's open the workbook. Here is the workbook. I have got it open with our test data loaded. 160 customers across 3 segments. Over 7,500 invoice rows. This is a realistic enterprise scale data set, so you can see how this tool performs at scale. The first tab is the Start tab. We are on it. This is your control panel. Here on the top, company name, reporting currency, report as of date. The date I have here is 31st May 2026. This is the date all calculation run from. Every overdue calculation, every aging bucket, every DSO figure relative to this date. This date is very critical, and this particular AR engine works on the month-end basis only. So if you put any other date other than month-end, the whole calculation, the DSO, CEI, best possible DSO, and overall analysis will be wrong, incorrect. Usually in a B2B environment, this kind of analysis is done once a month, and then the finance team and AR team follows up with this kind of data and analysis, especially chase list. And next month onwards, you repeat the cycle. Basically, what I'm trying to say here is that you need to do this monthly basis only. Then you will get the perfect insight how to change which customer is the most risky, and which customer are our regular payers. So again, I'm repeating, you need to use this tool on a month-end basis. So here the reporting date ideally would be end of the month date of whatever period you're trying to analyze your account receivable for. Then you can set up your currency, industry, B2B service. This tool is designed for B2B service for contracting businesses. Prepared by, you can put the AR receivable manager name or AR analyst name here. Then your financial year or fiscal year month end. Number of segments is 6. So here we can put up to 6 segments, but it's just a number. If you have more segments, the tool will work even though you have more than 6 segments here. We are taking example of 3 segments. And this is your approval name, approval manager name. Could be CFO, head of finance or finance director. Extended bucket mode means up to 8 buckets. I will show you in the demos very soon. And provision method would be either IFRS or your internal policy, whichever is higher. As you know, being accountant, we are taught to be conservative. So whichever provision is higher, either with IFRS 9 ECL rate or internal policy, whichever is higher, at the end of the period, we need to book the provision for your account receivable. Here there are workflow instruction which we have gone through. And here under point number 7, there is a chase list priority score configuration. So we have 2 tables here and there are instruction here. We will go through in more detail through an interactive slideshow later on to understand this. Now let's go to invoice log, which is here. The invoice log in version 1, this particular file, is a tab in the workbook, while in version 2 Power Query Edition, it's a separate Excel file. The structure is identical in either of the files, so either of the version. We have total 8 columns. GL code, GL name, segment, credit days, invoice number, invoice date, due date, and invoice amount. As you can see, if I scroll it down, we have total 7588 invoices. As you can see here, the count. And we have payment log. Same idea for payments. Payment log. We have total 4 columns. The key here is that 1 row per payment, not per invoice. If customer pays 3 invoices in one bank transfer, you record 3 rows. 1 per invoice match. This is how Power Query correctly calculates outstanding balance per invoice. You do not need to track partial payment separately. If your payment partially covers an invoice, just record the amount paid and Power Query will calculate remaining outstanding balance automatically. So this is very critical. Now we'll go to provision setup. Here are the 2 tables. First is IFRS 9 provision metrics, and this is your internal company policy. So this is set up based on my research and generally accepted percentages according to budget for ECL rates. So you might need to consult your auditors about these rates, but this is according to my analysis and my knowledge of IFRS 9. And this particular table is your own company's assumption regarding accounts receivable provision. So in some companies, they put provision of 100% over 180 days. They have more aggressive policy, but here I have taken more conservative policy for internal company accounts receivable provision policy. So these 3 tabs or these 3 sheets are manual in this version of the accounts receivable intelligence manager. While in Power Query version, these 2 tabs, that is invoice log and payment log, would be external files connected through files connection in Power Query, while provision setup tab will remain the same in both versions. Now once you have set up all these 3 tabs, when you start using the file first time, you need to go back to Start tab and click this Refresh All Queries and Pivot Tables. So if you click that, this will refresh all the Power Query connections in this entire workbook. While you can still do refresh by going here in Data and Refresh All, like this shortcut I have here in QAT, but it is important and very essential to refresh all these queries in a particular sequence. That's why I have created the VBA macro and attaching to this particular button, which will refresh all queries in a particular sequence to give us the accurate AR intelligence, especially through AR intelligence tab, the one we're going to see, dashboard, cash flow forecast, and the chase list, which is very important. So it is taking some time because it is refreshing all the queries one by one. And remember, we have a reasonably large data set, so it will take time initially. Now you can see it took 165 seconds and it has completely refreshed the report. Now let's go to AR intelligence tab, which is the 4th tab. Here we have KPIs, which are top KPIs, which is DSO, best possible DSO, average days delinquent, collection effectiveness index, AR at risk, provision coverage. So here we can see the DSO for all segments is 112 days. Now if you go back to invoice log and you see here in the segment, we have 3 segments. You might have even more segments. You might have even 5 segments. Doesn't matter. The entire AR intelligence tool takes care of any number of segments. And here we have credit days, GL name, which is customer name, GL code, that is your general ledger code for customer, and credit days for your customer, invoice number, and other details like invoice date, due date, and invoice amount. So going back to AR intelligence, here we see overall segments DSO. So all 3 segments complete DSO as of this particular date, which is 31st May 2026, which is coming from this particular cell. So if you remember at the start tab I mentioned, you need to set a month-end date allowed. So month-end date, you have to enter like this and it will come here. So it's a link. And here analysis period is 90 days, which is in B2B business is a standard norm. So any B2B contract business, the best way to analyze your DSO is last 90 days sale. So here we are looking at 31st May AR analysis, right? So we go backwards 90 days, including May. So from May month sale, that is credit sale for May month, then April, and then March. So this is that credit sale. So this is your 90 days credit sales for the period. The exit period would be report date minus 90 days. This is the opening AR balance, which is as of 28th February. So if you go back 90 days, you will get this particular date, 28th February. This is formula driven. So only manual input here you have to do is this 90 days, which is already there. And if you are in B2B business, you don't have to change this anyway. But if you like to switch this to another number, you can do that easily by changing this particular number. Now here there is a formula which calculates total credit sales for the period of 3 months, or you can say 90 days, which is automatically coming from this particular table, invoice log. And opening AR is coming from this particular pivot table that is called monthly snapshot. So we will go through this later, but for this particular KPI, I have already set up formulas. Now if you go to KPIs, we have, apart from DSO, we have best possible DSO. So this is the fastest you can collect theoretically all your receivables if all of your customer pays within their credit period. So for this particular case and for this particular demo company, their best possible DSO is 69 days based on this credit profile. So assuming all these invoices, which are, let's calculate, 7588 invoices, if all of the customers, all of these invoices are paid within these days, then you will get best possible DSO. Now, average days delinquent is difference between DSO and best possible DSO. So this is 43. So basically what we can say, your actual DSO is 112 days. That means all of your customer on average for all segment pays after 112 days of the invoice, while they should have paid, if all of them had followed the credit days, they should have paid in 69 days. So we have 43 days gap, which is the difference between 112 minus 69. Now what is collection effectiveness? Collection effectiveness is a percentage of money that was due in this period that you actually collected. 100% means you collected everything that was owed. Lower means money is slipping through. Then AR at risk. Portion of your total outstanding AR that is 90 plus days overdue. The older a debt gets, the harder it is to collect. Higher percentage here means you have a serious recovery problem. Provision coverage 9.9%. The percentage of outstanding, the AR that has been set aside as provision for the potential bad debt based on IFRS 9 expected credit loss rates. This is estimated amount you may never collect. Now below it we have a division wise, or we can say segment wise, this KPI. So this is whole segment, whole company level, and this is segment wise. So you can dissect which division is doing what. For example, government division has the lower AR risk. Why? Because usually in any country or any economy, government dues are solid even though they come late, but there is no solvency risk against them. So ideally this percentage should be lower, as this is the case in this particular example. Now let's understand this KPI with help of our slides. Three numbers all related, each tells you something different. Days sales outstanding, this is a classic AR metric. Take your total outstanding receivable, divide by your average daily credit revenue, and you get a number of days on average it takes you to collect from that particular invoice date. Lower is better, but this is the most finance team miss. DSO includes overdue invoices. So if you have a lot of seriously overdue debt, your DSO will be high even if your current invoices are being collected on time. This is where best possible DSO comes in. Best possible DSO. This is the DSO you would have if every overdue invoice was 0. You take only the current not yet due outstanding balance and run same calculation. Best possible DSO represents theoretical floor given your credit terms mix. If best possible DSO is 70 days, that means even if you have collected every overdue invoices today, your DSO would not go below 70 days, because that is just how long your customer take to pay even when they are paying on time. The gap between DSO and best possible DSO, that is your overdue drag. That is the number collection performance is actually measured against. Collection Effectiveness Index. This is the most complete efficiency metric. It asks, of all AR that was available to collect in given period, what percentage did you actually collect? An opening balance plus new credit sales less current not yet due balance at the end. This gives you universe of collectible AR. What did you recover from that? CEI of 100% means you collected everything you possibly could. Below 80% is a concern. Below 70% means your processes needs attention. This is why the tool requires 2 manual inputs: total credit sales, opening AR. Without those, the CEI denominator is incomplete. Everything else runs automatically, but CEI needs that context for your management accounts. DSO tells you speed, best possible DSO tells you ceiling. The gap DSO minus best possible DSO is your overdue drag. CEI tells you how effective your collection effort actually is. Now coming back here, if you see this setup, everything is automatically calculating from the setup. But here there are some grayed out cells and area also here. So If you see here, if I change the color, or let me change the font color to black, these are automated formulas to calculate collective effectiveness for each segment. So when you try to set it up, ensure that you don't delete this particular section. I will make it light gray again. Now below we have aging summary, which is also formula driven. So here, these are the buckets I was talking about. These are the common buckets you would find in any ERP aging report as well. But this tool calculates it automatically with the help of Power Query. So here we have very interesting data. Number of invoices outstanding, total outstanding, then each bucket holds what percentage of outstanding, IFRS 9 provision, internal policy provision, and we are taking higher of both. So we have higher IFRS 9 provision, that is ECL. So we have taken that particular amount, that is 9.7 million, as our final provision. And then expected collection. What is expected collection? Is nothing but your outstanding balance, which is this amount, minus your final ECL provision or your final bad debt provision. So difference between 97.8 million and 9.7 million is 88.12 million. So this is theoretically possible as expected collection. Now below we have segment wise summary, same kind of aging report but segment wise. So you can see the breakdown, the total shall match. Now we will stop here. We will not go through this particular segment for now. And also below this, we will come back to this. So let's go to the chase list. This is very important. This is the most complex calculation in this AR Intelligence workbook. So to understand this better, we'll switch to the slides. Now let me take you what I consider the most operationally useful feature of this tool, that is the chase list. Every customer with outstanding balance, rank from urgent to least. Your collectors, your AR executive opens this tab, start at row 1 and work it down, that is chasing each customer. No more who should I call first. The tool answers that question automatically every month. The 3 color coded tiers, red, amber, green, each customer has an action flag: chase, monitor, collect. But what determines the ranking? That is the priority score. And I want to show you exactly how this is calculated, because understanding it means you can also explain to your team and your management. So this is interactive priority score calculator. The formula is right here at the bottom, as you can see here. So we have 3 buckets, or you can say 3 segments: days overdue, outstanding balance, customer tier. Priority score is equal to 3 components added together. Component 1, that is days overdue. Maximum contribution 40 points. So if you go back to the Excel file and the start tab, here you can see 40 points. The formula takes days overdue divided by 180, capped at 1, multiplied by 40. So a customer 180 days overdue gets a full 40 points. A customer with 90 days overdue gets 20 points. A customer not yet overdue gets 0. So if you go back to slide, so here if I make this 180, we get full 40 points, as you can see. So if you switch to Excel, here if you have a 180 days outstanding days overdue, you will get full points, that is 40 points. Component 2, outstanding balance, maximum contribution 35 points, outstanding divided by 500,000, capped at 1, multiplied by 35. A 500,000 or larger balance gets full 35 points. 100,000 balance gets 7 points. So if you do here 100,000 and keep your eyes on the right side on the priority score slide, you get 7 points. And if you go 500, you get full 35 points, and beyond that the point remains the same. Now component 3, tier risk score. Maximum contribution 25 points. Tier C customers score 100 tier scoring, so they contribute full 25 points. Tier B scores 60, contributing 15. Tier A scores 20, contributing 5. So let's do this interactively. So for example, if we make this customer good, let's make this customer under 90 days and outstanding below 100K. And make it low risk. This is routine follow-up customer. So if I change this to C category, it switches to monitor, escalate if no response. If we switch to B, again it stays here. But if we max everything out, it becomes chase call today. So if I go back to Excel and show you the same table and the scoring, basically this particular tier scoring is based on this analysis, that is A and B, right? So there is a full guide available to make you understand what exactly it is, with a lot of examples, easy examples, which is available as a PDF guide in this pack if you're going to download this AR intelligence tool. This is not an arbitrary ranking. Every number in that formula has a reason. Days overdue has the highest weight, 40 points, because time is the single best predictor of write-off risk. Balance size is next, 35 points, because you want to prioritize recovery value, because tier already captures behavior patterns, so it adds a risk multiplier on the top of actual data. Now, how does this tool determine tier in the first place? Let me show you. There are 3 tiers, A, B and C, assigned automatically by Power Query using 2 rules. The primary rule is the DSO ratio, a customer DSO divided by customer agreed credit days. If a ratio is 1, customer is paying exactly on time. If ratio is 1.5, they are taking 50% longer than agreed credit period. If ratio is 2.5, they are taking 2.5 times their agreed credit terms to pay. Tier A DSO ratio below 1.25. They are paying within 125% of agreed payment terms. Low risk action, collect routinely. Tier B DSO ratio at or below 2.5. or oldest invoice over 365 days. Slowing down, may need escalation, the action would be monitored closely. Tier C, DSO ratio above 2.5 or oldest invoice over 540 days. Seriously overdue, action, chase immediately. Notice the or oldest invoice over X days condition. This is the overdue floor rule. Even a customer with a low ratio, if they have one very old invoice sitting there for 1 year, they are automatically moved to tier B. Over 540 days, they go straight to tier C, because an old invoice is not a canary in a coal mine. A customer paying everything else on time but ignoring an old invoice, that is the problem in the making. Let me go back to the workbook and show you the chase list live. So this is the chase list, which is completely automated and driven by the factors I mentioned, and it is also calculated automatically through Power Query M code. Every row is one customer, customer name, GL code, segment, then tier, priority score, outstanding balance, maximum day overdue, customer DSO, best possible DSO, overdue DSO, that is the difference. Collection rate, which shows historical payment reliability, action flag, chase, monitor and collect. Now let me filter tier C only. So if I go here and filter tier C, these are the customers that need immediate action. So see how priority scores are all in high 70s and high 80s, as you can see here. These are the calls your team makes today, not next week. If you look at in the screen the first case of National Roads Corporation, a construction segment customer. So if you can see, their maximum DSO or their maximum overdue days is 656 days, and if you go on the left, the DSO is through 37 days, so they are overrunning by 148 days. Similarly, all other customer, if you go here, Al Jazeera Contracting, they have a DSO of massive 3200 days, probably because they have an old outstanding and there is no recent sale. The DSO formula, as I've explained, takes latest 90 days sales in the calculation. So this particular customer may not have any current invoice while they have an old outstanding. That's why this DSO number shows really high. And their max overdue days also 711 days. Now coming back to this particular section which I've explained, let me explain you in more detail. IFRS 9 financial instrument requires that you have a provision for expected credit losses, not just losses you already incurred. For trade receivable, the simplified approach under section 5.515 allows you to choose a provision matrix. apply losses rates to aging buckets rather than calculating customer lifetime ECL. This is what this tool does automatically by this particular setup. If I switch back to slides, we also have IFRS 9 rates and internal policy rates. You can see this particular section is changing, and this is the higher of both. So we also have an internal policy. Internal policy rates, your internal provision policy may be more conservative than IFRS 9 requires. Some entities have board approved provision policies that are more aggressive. You can configure them separately in this Excel particular template, in Excel tab here. And we take higher of both to be more conservative. And that's how each bucket's provision is calculated based on higher rates between the both policies, that is IFRS 9 or your internal policy. Now next tab is very important, that is cash flow forecast, which is here. So this is the tab which is also automatically generated. We have the source table coming from Power Query and also the pivot table. Now let me switch to slides to explain this in more detail. For every outstanding invoice, the tool needs to answer two questions. First, when this will get paid. Second, how much will actually be collected. For the timing, if invoice is already overdue, the tool uses actual days overdue to assign a collection month. For current invoices, it uses customers' DSO overrun. How many days beyond their credit terms they typically take to make the payment. For the amount, the tool uses customers' historical collection rate from their invoice history. Tier C customers are capped at 35% probability because historically the high risk customer have much lower actual recovery rates. The output, expected cash collection by month by segment for next 6 months. Heavily front loaded, most of what will be collected comes in the first 2 to 3 months. What you see in months 4 through 6 is genuinely slow moving high risk debt. This number your treasury team needs for cash positioning. Instead of half a day manual formulas, this table is ready in seconds. Here is the cash forecast in the workbook. Segment rows, month columns, each cell is the expected cash collection from that segment in that month. Government segment, large balances, long terms but high collection reliability. The government forecast is front loaded but spread across more months. So if I go to government, only this section, as you can see, now for construction, more variable, larger overdue component, some of this gets pushed into later months. As you can see on the screen, details, smaller balances, shorter terms, quicker collection cycle. So if you see the summary version, as you can see overall impact of collection. The total row at the bottom, which is this, is a CFO number. Monthly cash receipts expected from account receivable. Put this next to your payment obligation and you have a near-term liquidity picture. One more feature before I wrap up with version 2 architecture, AI commentary. This is the AI-powered reporting module. You can connect your own API key from your supported provider, Anthropic, that is for Claude, LLM, OpenAI, GPT, DeepSeek, Grok, Gemini, Qwen or OpenRouter. And you get 4 types of reports generated at the click of a button. You get executive summary, a board-ready paragraph on portfolio health, top 3 risk, priority actions, written from your actual data, DSO collection analysis, a breakdown of payment speed by segment with specific slow payer identification, risk and provision report, Tier C exposure, ECL adequacy, customer at highest credit risk, collection priority brief, an operational briefing with a top 10 accounts and a specific recommended action for each customer. The reason this is powerful and different from just asking ChatGPT to write something is that the AI is reading your actual customer names, balances, days overdues, tier classification. It is not generating generic statements. It is generating analysis specific to your portfolio. Let's go to Excel. This is the AI commentary tab. Now if I zoom in a bit, as I explained, we have 4 buttons. And to configure this, you need to unhide a sheet called AI config, as you can see, which is here. So this is a generic guidance. You can choose your provider like this and automatically your drop down will also dynamically adjust. So if you choose OpenAI, you will have 3 options. If you choose DeepSeek, you'll have 2 options. And if you choose Anthropic, you will have 3 options, 3 models: Opus, Sonnet, and Haiku. And if you choose Quen, you'll have 3 options: Max, Plus, and Turbo. Similarly, if you want to go with the free plan, which is Open Router, you'll have this free LLMs to help you do the AI commentary. So I have personally put my own API key with Claude Sonnet currently. Endpoints URL is a formula driven, it will automatically captured. And this is really critical because you need to set this up when you start using the file. I have hidden my API key for obvious reasons, but you can see here AI key is entered. So you can see here this particular flash. If this particular cell, that is API key, this particular cell was empty, it would have been error. So if I delete it, you will see no E here. Now let's go back to AI commentary. And let's click on executive summary. So as you can see, this particular section is generating comments through LLM. As you can see, it has generated the commentary. You can pause the video and read it. If you have the file open with you, you can go along with it, or you can try the same with your own live data. Again, you need to ensure that your data protection rules in the company is allowing this. So if you have an Anthropic API key, which is a Teams key or is approved key, where Anthropic has given you guarantee or given you a contractual promise that they won't train their models on your sensitive data, then only use such a key. So be mindful about it. So if you click DSO collection, risk provision review, collection priority brief, this particular section will be updated accordingly. Now here you can ask a custom question. So here I have put provide segment wise commentary, all KPIs, which segment is doing better, what are the risks in each segment, etc. So if I click run question, so once you put your custom question here, you need to click this button, run custom question. As you can see, this particular area or this particular section will be overwritten. So be mindful. If you want to copy the commentary after previous clicks, you need to just immediately copy it before you run your next particular button or next query with AI. As you can see, it has given segment wise commentary or construction segment, government segment, retail segment, segment comparison, and action items. This is inside Excel, so keep that in mind. We don't have to open any other tool or any browser or any chat agent to share our sensitive data. Provided the API key you are using, you are absolutely sure that is the key with which your AI service provider won't train your data. Other than that, it is fully customized, fully private. If you are a little bit advanced, you may use Llama, a local model as well. You can download it through Ollama or LM Studio, where you can download any competent model which you can install in your own machine and then run such query as well. The configuration for that would be different, but more or less it would be same. We also have a mapping guide here. So in this mapping guide, these are the most common ERPs used globally. So I have listed all of them based on my research, and this particular mapping guide tells you how to extract these 2 reports, that is invoice log and payment log. For example, this is for Oracle Fusion. This is for Oracle Fusion ERP Cloud. This is Sage 50. Odoo, Focus ERP, which is for GCC MENA region. And if you go on the top, we have QuickBooks Online, Xero, Soho Books, Tele ERP 9, Tele Prime, SAP Business One, Microsoft Dynamics 365 Business Central, Oracle NetSuite. Now we'll go through remaining tabs. We've gone through the mapping guide. Now let's go through aging and segment. Again, these are automated tables. One is the bucket summary, aging bucket, and one is the segment model. So these are auto-generated through Power Query table. And here you can see on the aging bucket, we have buckets, 8 buckets, and aging order. It is for ordering these particular buckets. It is more for Power Query setup. Invoice count, customer count, outstanding balance, percentage of portfolio, then the provision and provision percentage, that is provision percentage, which rate we are applying. And then we have expected collection, which is, I mentioned, difference between outstanding and final provision. And we have expected recovery percentage as well, and risk flag. So this is the summary level, the summary as of aging bucket level. Now if you go down, we have a segment wise summary as well, and inside each segment aging bucket. So here similar data with risk flag. Now let's go to dashboard. So dashboard is beautifully designed. It shows key KPIs for a CFO or a head of finance or a finance director. So it shows total outstanding, ECL provision, expected collection, DSO overdues, and AR at risk. Now all these numbers are as of this date, as I mentioned many times. If you go to start tab, this particular date. Let's go to dashboard. Here we see segment performance. So if you have different segments, you need to enter it manually here. There are a few manual things you have to do on dashboard and AR intelligence, which is properly highlighted with in-cell comment like this. So this is also automatically calculated. All these key KPIs which CFO can see. And below we have this chart showing outstanding segment wise. You can click like this. It's pivot table chart, or pivot chart I should say. So this is the outstanding balance, retail, government, construction, and if you filter it all, it shows overall company level. And here we have collection forecast. So which segment and what kind of forecast, how much we can collect month wise in next 6 months. This is the top 10 key risk account in tier C. So it calculates, or it shows via pivot table, which are the top 10 customers in each segment. So if you click here, construction, government, retail. So as I mentioned, governments are the most sovereign kind of account receivable, meaning the default of government dues is not that common around the world. That's why they are not in that priority list, though they are very late payer. But as far as the risk is concerned, their credibility is really high, generally in most of the economies in the world. But if you go to construction, we have this top 10 risky accounts, and if you go to retail, these are the top 10 risky accounts, which is again coming from our chase list here. So this is a very important Power Query setup, or M code, which this tool handles it with few clicks. Let's go back to dashboard. We have two more charts. Top 10 best customers credit days versus actual DSO performance, as you can see here. So these are the top 10 customers where their DSO is quite close to their credit days. And on the right, we have the negative side, that is top 10 worst customers credit days versus actual DSO performance, as you can see. Now, if you go back to AR Intelligence, we stopped at this particular point, which is nothing but top 10 cash collection forecast, which is coming from this particular tab. So if you click on the plus icon, you will see full details, but here in AR Intelligence, we have only top 10 for each segment. So these are the customers from which you can expect collection or cash flow over 6 months. So this is also done with formula or mathematical formula, which I have explained through this particular slide. As I've explained, you can go through this part of the video again, and I will also leave this particular file, this HTML slider, inside the downloads pack, and this is the actual table from which this pivot table is generated, or it has been made. These are the best pairs. So same kind of data. This is the visual data with only DSO as a in chart as a main KPI to look for. But if you go here, same data, actually these charts are made from this particular data only through a pivot table, which is down below. So these are the pivot tables which ideally you should keep it hidden, but I kept it for this introductory video. But this ideally should be hidden. They are not part of the actual dashboard, but based on these pivot tables only, this dashboard is refreshed and this data you can see here accurately. So make sure that you don't delete this, but hide it or put it way down and make it hidden, or you can group it or outline it. So here you can see more insights. For example, for the top 10 best pairs or top 10 best pairs, you can see all the KPIs, including collection efficiency, expected collection, and the action, as you can see here. for the worst as well. You just see the DSO comparative, big difference, and also outstanding, also max overdues. Now this is the monthly snapshot tab, which is generated from invoice log basically and payment log. So what it shows a frozen picture of AR portfolio at the end of each month, stacks them side by side. This is used to spot the trends where overdue balances are growing, provisions are increasing, or DSO is improving without touching any formula. So this is the purpose of this table. As you can see, we have segment column, month end, GL code, GL name, and month end balance. And this sum of period invoices 3 months period which we have chosen here. If you go back to start tab, or if better you go back to intelligence tab, the period between these two, that is the period invoice here, is sum of period invoices. So if you go scroll down and see the total, this will match with your invoice log. So if you total this, we have 948,593,600. If you go to snapshot, the same amount. Same with this last column, 850 million. So if you go to payment log and sum the column of amount received, you have 850,764,400. So if I go to snapshot, you have the same amount. But this is calculated differently for the purpose of our KPI. And this is also for our validation. So if you go to chase list, we have validations here, these 4 particular columns, which must always be 0. So ensure that these validations are 0. Let me highlight it in different color. I save the file. So this must be 0. Now I will show you the second version of this particular AR Intelligence Manager with Power Query. So this is the file, exactly same setup with everything, except we don't have the 2 tabs as I mentioned. These 2 particular tabs, invoice log and payment log, which are not here. But we do have provision setup, and there is a new file or new table of tab, I can say, is file setup Power Query, which is an automated setup. And if you go back, you will have this folder where you will have these 2 files, invoice log and payment log. So these are the additional files. So if I open here, the same invoice log, I have kept the same data, and if I open payment log, I have the same data for payment log. So if you have a larger data set, more than here we have 7,000 plus rows. If you have suppose 100,000 rows, you can still work with this file in this particular version, that is Power Query Edition. Now here, once you download this entire folder, which is here, this entire folder, you have to set it up like this. You'll extract the zip file and you'll keep everything in this particular folder, including source file. This particular tab will automatically detect the file path, which is important for Power Query. So this is all automated. So once you have saved this folder in your hard disk, it automatically checks where this particular source files are. It checks where are these source files automatically. So for this particular setup in my computer, it is set up here. As you can see, it is with the formula. So based on that, you don't have to worry about anything. Once you extract the folder, you open these 2 files and update the invoice log and payment log, and that's it. Now, once you have done that, you have to come to start and refresh AR Intelligence Manager workbook. That's it. Everything else remains the same as I explained in the other version. Once you have downloaded any of the version, which is Power Query version or a single file Excel version, once you open the folder, obviously for single file version, you will have one Excel file containing everything as I explained in this tutorial. But we will also get complete guide and explainer for key concepts. So you'll get a master file like this. So if I will have a master guide like this, which is around 25 pages, which you can keep it handy. And believe me, it's not a boring read. It's a hands-on guide. You might need this guide handy with you until you get hang of the tool. So you might need to refer it maybe 3-4 times. And once you have a hang of the tool, you won't need it. But keep it handy for any kind of questions or clarification. Now we also have a cash forecast explainer. This particular guide explains easily with very easy examples, easy to follow example, how exactly the cash forecasting works in AR Intelligence tool. And the chase list explainer also has a separate guide, as you can see here. So this is also a bit difficult. A lot of statistical calculations are going on. So you may need this particular guide. You may need to read this at least 2 to 3 times to understand how the chase list is configured and how Power Query works and how that chase list tab is created based on your data. So all this comes in the package in both versions. So if you go to Power Query, here we have the different setup which I explained how Power Query works. So this is your report file and these are the source files. And you also get the 3 guidebooks here. And that is it. AR Intelligence Manager complete. Let me be direct with you. If you are a finance team managing trade receivables, and most B2B finance teams in GCC and around the world are, this tool will save you hours every month. Give your collection team a structured process they can actually follow and give your board and auditors a documented, defensible IFRS 9 provision methodology. Again, I am differentiating what are these both versions are and who should use them. If you are an individual or a small team and you want a simplest possible setup, paste, refresh, use version 1 of this particular AR Intelligence tool. And for version 2, if you want automation, a shared drive setup, or you are managing a larger register, connect your source files once and refresh forever. If you found this video useful, please subscribe to my channel. I publish finance tools, tutorials and analysis content regularly. If you have a question about this tool, the methodology or anything related to IFRS 9, drop them in the comments. I read all of my comments. The link in the description below to download this tool. Thank you so much for watching and go collect your money with AR Intelligence Manager.